Welcome to your August 2026 housing market update for Orange County. Today we're going to be taking a look at exactly what the data is telling us is likely going to happen as we enter the second half of this year, as we continue going through the second half of this year, and my expectations going into 2027. If you're new to the channel, my name is Ian Phillips. I'm a realtor in Orange County, and I am the owner, developer, creator of this platform called themarketvector.com. Link in the description below. Essentially, this tracks a little over 190 cities in Southern California across 5 different counties. And basically every single housing metric you can think of is being tracked on this platform. So for example, if you click Irvine, you can see market activity, sales price, market health, cash purchases, price reductions, demand rate, month supply, investor purchases, buying pressure, foreclosures, school performance, economic indicators, violent crime rate, property crime rate, etc. Everything is tracked on this platform. There's a ton of free information there for you. If you do upgrade to the Pro version, you get significantly more data, as well as the ability to download reports anytime you want, or you can just enter your email address, and every time I update the data, you will automatically get sent a market update for any city or county of your choice. You can do as many as you'd like. So let's get straight into Orange County. See exactly what's going on in this market. And by the way, we have the first meaningful price reduction all year for Orange County. So last month, the median home value was 1.23 million. Right now, it's a little over 1.2. So a $30,000 price drop month over month. And as you can see, home values are basically unchanged for the last year, down 0.5% because of this recent price drop. We'll get into some historical data and kind of see what home values do approaching the second half of this year. And since we're in it right now, give my expectations based on some historic data. So let's see, active listings down 8.5% year over year, a little under 5,200 homes for sale right now. Pending sales, homes that are in escrow, down 1.6%. Days on market, down quite substantially, 17%. So on average, homes are getting to escrow 17% quicker this time compared to last year. Homes sold up 5%. So this is a pretty significant discrepancy that we're seeing. So inventory is down 8.5%, but the number of real buyers, real home purchasers is up 5%. So if this trend continues where inventory, is not increasing at the same rate as home buyers in the market, more often than not, that does lead to house values going up, but we'll get into that as well. Month supply of inventory, 2.5 months. This has been relatively consistent all year. 20% of all homes right now are being purchased in cash. Pretty significant for a market where the median home value is, $1.2 million. And a fifth of all of these 1,800 homes were purchased with cash. 23%, so almost a quarter of all of those homes were purchased by investors. And investor buying pressure at 2, you want to see this in a positive range in any market where you're considering buying a home. Essentially what this means is that for every one investor that is selling, there are 2 that are buying. So investors are actively purchasing in this market right now. Foreclosures, 41 foreclosure filings, 12 being sold by the bank, only 0.8% of homes for sale are distressed. That's kind of an irrelevant number, but to be expected in Orange County. The median home value, median household income here is $120,000. Unemployment rate 3.5%, very, very low considering the California average is like 5.2% or something right now. So let's get into some data. So as you can see, the median home value has had its first meaningful drop this year, like I mentioned, down about $30,000 from the previous month. Considering, where we started the year, just a little under $1.1 million. So still up significantly on the year, but as we mentioned earlier, down slightly year over year. And actually, home values haven't really changed much since August of 2024. So you can see here, home values were basically the exact same as they were 2 years ago, in Orange County. So that's actually pretty significant data because we can kind of see house values have sort of just been bouncing around. They went down to 1,050,000 up to 1.2, down to 1,080,000 up to 1.23. And what I wanted to point out is that, I'll smooth this out a little bit, is that every single time, almost without fail, as we approach the end of the year, since we're in the second half of the year now, house values typically start to decline. So you can see here they peaked in October, dropped all the way into January. Here they peaked in September, dropped all the way into February. Here in October, dropped all the way into March. Here in June, July, dropped all the way into December, and then started going up as the year started. So this is a common trend that we see in Orange County, where home values typically decline month over month as we have, hit the middle of the year, starting to taper, starting to enter really Q3 of this year almost. So that is my expectation for the second half of this year. Prices will likely start to continue declining. August, September, October, November, December. I wouldn't be surprised if we have a steady decline. Maybe we get back to 1,150,000. What percent would that be? That would be like a 3% price reduction, 3% drop in home values. And then as we start 2027, typically what will happen is that home values will continue trending higher. Now, obviously we have a big uncertainty in terms of mortgage rates. Right now they're sitting at a little over 6.5%, but if they, get to 7.5%, who knows what the Federal Reserve is going to do? All of this could have a potential impact on what the market is going to do next year. But as of right now, I'm sticking to historical data, and that tells me that going into the second half of this year, probably going to have a correction. Not necessarily a correction, but prices declining, maybe 5%. What was the largest? So in 2022, I think was the largest. Home values went to 1,025,000 and then dropped all the way to 916. So that's a little over a 10% correction, 10, 12%. So if we had that, 1,224,000, that would take us down to 1,100,000 almost. 1,101,000, 110,000. So that would be a 10% correction if we had that heading into 2027, and that would be a buying opportunity. Like I mentioned, price reductions, price cuts. In December, 34% of this market was having price drops, and now it's 29%. 29% of all homes that hit the market are having price reductions. So if you're a buyer in this market, it's kind of important to know that a significant amount of homes are having price drops. I closed on a home last month representing some buyers. We got it for $50,000 below list price. It was pretty easy to establish what was going to be, what our negotiation power was going to be on this home because it had been on the market above the average days. And as a result, we came in under list price. So all of this, I'm able to kind of see exactly what's happening in every city here because I have access to all of this data. So creating this platform has actually been extremely helpful for me in my business, which is really nice. Month supply of inventory, one of the most important metrics that I track. And this kind of takes into account demand as well as supply. So basically what this means is how much inventory is available relative to the amount of homes and buyers that are, homes being purchased and buyers that are actively in the market. And this has kind of slowly been declining since September 2025. We had 3 months of supply, dropped all the way down to 2.5 months. And what I want to kind of look back briefly is this 2023 decline, where we went from 3 months to 1.5 months of supply. And during this period of time, we had prices going higher. So if this continues declining, more than likely this price correction that we are likely going to have in the second half of this year is going to reverse into 2027. So if you're a buyer in this market, if you're going to get a home, negotiate, get it below list price, get some closing costs paid for, because this is the opportunity to do so. If you're a seller, expect your home to sit on the market a little longer because buyers have taken a step back. There's less active purchasers in this market right now. And as a result, prices had a pretty significant drop, like we saw with the median sales price month over month. Obviously, that's just 1 month, but history has told us every single year in the second half of the year, we start to get home values declining in Orange County. And that is my expectation for the second half of this year as well. But that's kind of it for the video. Let me know your thoughts in the comments. If you want to track these markets yourself, head to themarketvector.com. Ton of free information there. If you want, you can upgrade if you want access to even more information. Subscribe for more. I'll do weekly videos diving into markets across Southern California. See you next time.